So welcome today to, I guess, the third one of our getting things organised as a tax agent accountant before year end on transfer pricing, getting everything into play, especially given when you look at the situation with the federal budget, they gave additional funding towards the audit. We're seeing so much activity at the moment. We're having so many contacts from clients and accountants in relation to letters that they're getting. Now, country by country reporting is going to continue to be one of those focus points from the tax authority. So what we want to go through today, a bit more than our first session where we touched on it slightly, but country by country reporting, you know, what is it and how has that gone? So just to tell you a bit about transfer pricing solutions, we aim to provide practical, proactive and cost-effective transfer pricing solutions for you, hence the name, I guess you could say, with our experienced team. And we have a global list of clients. We deal with probably half our work comes from the companies directly and half our work comes from our accounting firm partners that we help support them. We do support probably more than half of the second tiers throughout Australia in being able to provide transfer pricing services to their clients, and then a number of suburban firms around there as well. A bit about our group structure. Transfer Pricing Solutions was founded by myself 16 years ago when I left the Big Four and set up for myself. And we expanded, and time is going quickly, but I think we expanded now 7-8 years ago into Singapore. Adriana heads up our Singapore office. And then about 5 years ago, we expanded into Malaysia. And HC, who's based here in Australia, originally from Malaysia, he gets the benefit of being able to, you know, best of both worlds, paid travel, you could nearly say, living in Australia, and gets to go over to Malaysia and manages our office in Malaysia. And we have our teams over there as well. So it's a bit about our background as well. From a industry leadership, we have, have been known for quite some time now as the leading transfer pricing advisor, as an independent transfer pricing advisor, and outside of that of the Big Four as well. We're really proud of the fact that the last few years we have been assigned as a tier 2 transfer pricing advisor up there with some really, really top names as well. From an Asia Pacific perspective, we have had a number of accolades in relation to Australian Transfer Pricing Advisor of the Year, Asia Pacific Transfer Pricing Advisor, and both our Singapore and Malaysian offices have won as well. So we are quite well respected in obviously the transfer pricing space. A bit about myself. I think I probably know half the people on the call today. My name's Shannon Smith, so I'm the founding director of Transfer Pricing Solutions. I come from a background of working in the Big Four, as do most of our team actually. And so I started up Transfer Pricing Solutions back in 2007. I actually just saw the need for, at that time, literally none of the second tiers were doing transfer pricing at that time either, and it was really, if you needed transfer pricing, you actually had to go to one of the Big Four. So I saw a niche in the market to be able to support companies, but also accounting firms that didn't have that level of expertise. So back when we started, I actually was the transfer pricing kind of advisor for all the second tiers except for 2 of the second tier firms, and then a number of small firms, and we've just grown from there. Speaking with me today is also HC. So HC has over 10 years experience, originally from Malaysia, studied in Australia, has worked at the Big Four in Malaysia, and then also here in Australia, and heads up our Malaysian office and provides advice obviously on the Australian side, but also on the Malaysian side as well. And he loves country by country reporting, so this is his favourite topic. So let's get into country by country reporting. What we want to go through today, who does it apply for? This is really important, especially as a tax agent, to make sure you're covering your side, to make sure that you're actually highlighting it, because the client's going to be relying on you to highlight when they need to think about this. What is country by country reporting? When do you need to lodge, and then how do you actually lodge? So let's get started with who does it apply to? Who is country by country reporting applying to? So we're looking at, with country by country reporting, who does it apply to? Significant global entities. So who is a significant global entity? Now this was post 1st of July 2019, and they have expanded the concept of who is a significant global entity. But basically what it looks at is a parent company whose global income is Australian dollar equivalent, 1 billion or more. In euros, it's 700 million euros. And it's also a member of a country-by-country reporting group or one of the other group members of the country-by-country reporting parent. So sometimes if you are doing the work for a foreign subsidiary here in Australia, and you might even say, well, my foreign subsidiary is only doing 1 million turnover, 2 million turnover, surely this doesn't apply to me. I would always be making sure that you're getting your local person here, your point person here, to ask their head office CFO, do the country by country reporting rules apply to this company? Is the parent company preparing and lodging a master file? Because if they are, that's going to be basically filtered down. So it doesn't matter. And I've seen a number of clients get stuck from this situation where the foreign subsidiary here is small in our world overall, but they're part of a wider group, or their group, and I've had that where they've even gone to the parent company of that particular group, and maybe, you know, turnover's like 50 million, and so they think, oh, it's not that big, but it's owned by an even larger group, and so it's actually gone up the chain. So just to cover yourselves as tax agents, I would be making sure that you do have that correspondence in writing, that you've actually had asked the CFO to reach out and on a global level, do the country by country rules apply to you? Because you don't want a situation where master files and information is being fed down and it's coming back to you on that side. So first want to establish, are you a significant global entity, or are you part of an overall reporting group that needs to do it? So once you've actually found out, yes, I am part of that, what is the country by country reporting? What is that reporting? When we look at country by country reporting, we're looking at a country by country report itself. We've got the master file and we've also got the local file. Now, the local file, it can get quite confusing, is not transfer pricing documentation. So what you're going to find in a number of countries, Australia included, but many other countries, you are preparing country by country reporting and the master file and the local file, and you've got transfer pricing documentation, because the country by country reporting rules did not cover everything that we have in our local transfer pricing documentation requirements. So they are two separate things. Sure, you might be able to leverage across the two, but they are actually two separate things. So it is basically a three-tiered approach. So if we look then, the country by country report. So this is generally prepared by the ultimate parent entity, and it does provide an overview of the allocation of income, taxes, and business activities by tax jurisdiction. So it's actually going through, you know, what tax jurisdiction are you located in? So maybe it's Australia, that'll be listed. What's the revenue from unrelated parties versus related party, and the total. They're trying to establish there is that entity, and in our case, is that subsidiary in Australia getting most of their income from a related party, or is it coming from unrelated? What's the profit or loss before tax? What's the income tax paid on a cash basis? So they're trying to see, are you the Google that earned millions of dollars and paid $80,000 of tax in Australia? Are you that Google? What is the income tax accrued for the current year? So they're trying to work out that. What's your capital, to work out the kind of, I guess, the value of the business and where that, what's the equity that's in it, accumulated earnings, number of employees, and then basically looking at, you know, what are your tangible assets other than cash and cash equivalents. So they're trying to get a snapshot of each of the different companies that you have and what countries they operate in. So what happens in each of the different jurisdictions, and as an overall, as part of a wider group, it gives them, or it gives tax authorities quite a really good snapshot of where potentially might be the value drivers of the business and where they might expect therefore the profitability to come from the business on that side as well. Now, table number 2 is looking at all the list, and it actually includes going through the details of then the different transactions. So we've already told them we're operating in Australia, but now we actually have, you know, 3 entities in Australia, and these are actually what they do. They do R&D, they might hold IP, maybe they're responsible for purchasing, manufacturing, sales and marketing. They're trying to work out the functionality. Now, with all of that information, you're really giving tax authorities a lot of information as to what might be the expectation of profit levels. You know, if you've got 100 people and they're in the Philippines doing admin services, that's going to be a different profit expectation outcome from, say, 10 people sitting in Australia undertaking research and development. So that's a kind of really giving in a snapshot some of that information to them. So that's the country by country report, often done by the head office. Now we go over to what's the master file. So the master file is also prepared by the ultimate parent entity, and it is kind of, the blueprint is the best word for it, of the overall group. Now, a lot of this information can come from your transfer pricing documentation. So whilst they're two different documents, they actually, you can leverage a lot of that. But it's looking at the organizational structure, the description of the business, the group's business. Now, obviously, the country by country report gives it all in a table format, very easy to get a snapshot of it. But this is going to provide a lot more information. What's the group's intangibles? What are the intercompany financial activities? And then the group's financial and tax position. So the master file is going to pull all of that together and give them, I guess you could say, give the tax authorities a really good story as to what the situation is. We then have our local file. Now, as I mentioned earlier, local file, not to be confused with local transfer pricing documentation. The Australian local file is not TP documentation. The local file prepared by the local entity in Australia or whichever country you're operating in. And it's actually going to be going through what's happening here in Australia, and you're answering specific questions of the local file, which we'll go through in a bit more detail, but you will still need transfer pricing documentation. Now, within the local file, there are a few different forms of that. Now, we do have we have the detailed international dealing schedule. So if you attended last week, you'll understand the international dealing schedule. But with the local file, there is the short form, which gives a brief overview of the local entity in relation to the group. We'll go into a bit more detail when that might be applicable. Then we have part A, when certain criteria is met. That goes through a lot more of the detailed international related party dealings and transactions. And then part B, if there's certain criteria, then it will go through and looking at the provision of intercompany agreements. So let's dig into a bit more on the local file short form exemptions.
Yeah, maybe I guess I'll take over from here in respect to the local file. I think because local file is the one that, especially for Australian entities where we are foreign owned, and a lot of tax agents would realize that the Australian entity may be the one that's on a smaller scale of things, that when you happen to be part of the country by country reporting entity upon assessment, as Shannon has mentioned earlier, then you're required to prepare the so-called local file. So in essence, the local file is more or less a really detailed version of the international dealing schedule. Looking back to the ideas that I've gone through previously, it's just looking at country, transaction type, and the final figure. But then in the local file, you're basically disclosing more than that. You'll be looking at the company name itself, the counterparty company names, the location, the method, the percentage of completion date, as well as looking at other transactions as well. So basically, it has more details than the international dealing schedule. Now we have three types: short form, part A, and part B. Short form is where if you satisfy certain criteria, then you are only required to prepare the short form. This is more or less an avenue for smaller taxpayers where they do not have that much of a international related party transactions in there, where you're only required to prepare a short form. Now, I'll go through the short form exception list. We call it exception list. First part would be to look at whether your the Australian entity would have any of these transactions. So it goes from having any derivatives. So back in your IDS, if you have any financial transactions that involve derivatives, swap, forward options, futures, then you fall under this exception list, as well as any intangibles related transactions, transfer of IPs, having trademark, patent, design, copyrights. And thirdly would be having a transaction with of a capital nature. Most of the time would be your loans. So once you have a loan, more or less you then have to prepare part A and part B. So if you have any transactions that falls within the exception list, then you are required to prepare part A and part B. Now, the next thing would be, let's say you do not have any of these transactions, then you have a revenue threshold, which is if your total value by transaction is less than 2 million, right? Similarly, this would include that loans, but once you have loans, I would say you'll be within the exception list. But if you look at whether you have any of these transactions that are less or more than 2 million, then you can then choose to prepare a short form, right? Or if within your IDS or within your transfer pricing documentation where you have used the simplified transfer pricing record keeping criteria, either for small taxpayers or materiality, then you can only prepare the short form of the local file. And how you would know whether you're using the STPRK for small taxpayers or materiality is you have to fall back into the taxpayers transfer pricing documentation, looking at the method that they have used to analyze the transaction, whether they have used the STPRK for these two options or not, right? So to recap, if you do not fall under, you have no transaction under the exception list, and you are below 2 million, or you use the STPRK for small taxpayers and materiality, then you only need to prepare the short form of the local file. If not, then we'll lead to the part A. Now, the next part, I'll go through the part A first, where part A is more towards providing more details on your international billing schedule. So it has a lot of sections that are involved. So which means that you'll be looking at not just the total figure, it's actually broken down into their respective transactions with the respective companies. So that's part A. And as we have mentioned earlier, part B would be, it depends on whether you have the intercompany agreements or not. So the rule of thumb is that if you do not, it's not a requirement to have an agreement in place for your intercompany related party transactions, but it is important to have it, to formalize it, not just because for the local file purposes, but because of your overall transfer pricing documentation and transfer pricing arrangement, to have a form in place to reflect the substance that you are trying to achieve. Now that's your local file, yeah, short form, part A and part B. Then the next part would be, what are the statements to be lodged, right? This is one of the things you ask a lot. Now, CBC report is one of the things that you do not need to lodge, right? If you are the foreign entity, you are not the entity that is preparing the CBC report. You are only required to notify the ATO that another party within the group is lodging on your behalf. The notification is actually done during the process of the lodgement of your local file, right? That where you have to input all the details of which entity, who is the reporting entity that is actually lodging the country by country report, their tax identification number, as well as their country. Because CBC report is actually being exchanged between countries that has signed the MCAA, which is a multilateral competition authority agreement where they don't just share CBC report, they share other tax reports as well globally. So for CBC report, you're not required to lodge if you're not the entity that is preparing the CBC report. Only notifications is required. Next would be the master file and local file. So local file, obviously you have to prepare for Australia and you have to lodge for Australia to the ATO. There's common misconceptions on master file where it was believed that master file actually prepared by the ultimate parent entity and that they have lodged it, and that this master file is actually exchanged between countries. Actually, only the CPC report is actually exchanged between countries, while the master file still falls within the obligation of the local entity to lodge to the ATO. So only CPC report is being exchanged, while master file and local file will need to be lodged to the ATO because they are not being exchanged between the countries. So bear in mind that you have to lodge the master file and the local file. Now next, I'm going to go through when do we need to lodge the CBC reporting statement. The rule of thumb is that it is 12 months after the income year, right? So 12 months after the income year. Sometimes, especially for December year enders, where the ATO may provide some buffer due to holiday season, Christmas, New Year's, where they would then extend it to January or February. But that's not always the case. But for now, every year we have been seeing an extension, but I'm not sure whether that will continue yearly for December year enders. So it is prudent to ensure that you have the CBC reporting statements ready to be lodged by year end and not wait until they provide that announcement that they're going to extend. Then if they do not provide that announcement, then you may be in the pickle to actually lodge it at the last minute. So bear in mind. And secondly, so another thing about timing is there is an option for reporting entities is an administrative solution to ease the compliance burden for taxpayers, where you can choose to lodge your Part A, only Part A of your local file at the same time as your lodgement of a tax return. And this means that if, let's say, your tax return, you have actually then applied for the extension of a tax return, then your Part A is theoretically extended as well as to the deadline of your tax returns lodgement, right? If taxpayers choose to go this path to lodge a Part A, then you're not required to prepare to actually complete question 2 to 17 of the IDS, but that's only Part A, right? So once you have lodged Part A during the time that you lodge your tax return, you will still need to lodge your short form as well as your master file by 12 months before, right? By end of the income year before, like for example, December year end, then will be to this December 2023, right? So bear in mind that you have these deadlines captured in your calendar so that you don't miss thinking that you have lodged a Part A, then your CBC reporting obligation is done. And that's not the case where you actually have other statements to be lodged by end of the year. And for the deadline that can't be met, extension can be applied, but nowadays you really need to have a valid reason why you need the extension. Previously, during the transition process and when country by country reporting is due, ATO has provided some kind of leeway that we understand that it's a new thing and it may not be followed. The deadline and the extraction of information may not be that timely. Hence, they are more inclined to provide that extension to the deadline. But now, country by country reporting has been up since 2017, that you really need to have a valid reason why you require this extension, right? So, and again, when you are aware that an extension is needed, it is crucial to apply as soon as possible, because when you apply, it may take time for the ATO to come back, right? So with that in mind, you need to ensure that my experience is you need to apply at least 3 months ahead, because the ATOs would not be able to reply straight away. It will take some time for them to reply, and they'll look at your case, they'll look at whether your reason is valid or not before actually providing the extension. So far, it's still okay, but I think we have all our clients were actually quite compliant with the deadline, so we don't have any issues with the extension so far. Next, we go to its exemptions. Yes, there are exemptions that's been provided to taxpayers to sort of ease compliance burden, or there are some circumstances where you're not really required to prepare because, or you don't have the resources to prepare, or you do not have the avenue to prepare the CBC reporting statements, where then the ATO actually provide certain relief or administrative solutions and fast-track exemptions or any other exemptions that you may have a valid reason to use. Now let's go through first up the admin relief. This is of the view that the first one would be CBC reporting, where the parent entity has an obligation to lodge within the jurisdiction that has an active CBC exchange agreement with Australia. Now, this shows that when you have a surrogate parent entity, I guess we didn't go through the surrogate parent entity part. Now, surrogate parent entity involves to select a parent entity other than your ultimate parent entity within the group to lodge the country by country report or the master file, right? So there are certain circumstances where the ultimate parent entity may not be required to prepare a CBC report, but then in another jurisdiction, the CBC report obligation kicks in, for example, Australia, where they are required to prepare a CBC report. Hence, you need to look at whether this will apply in Australian point of view, because there are circumstances where jurisdictions that do not have that obligation, obviously then they would not be able to, they would not prepare this CBC report. Hence, it lies a tier below, generally the immediate parent entity, to lodge that of the country by country report. And if it falls under Australia, then you could then use this admin relief to inform the ATO that we may be the surrogate parent entity, that we may not have the information put in place. So this admin relief generally applies during the early process, where you could choose to apply for the exemptions, but the ATO would remind you that for now, for this income year, that we provide the admin relief, but going forward, they may not have the discretion to provide this admin relief, because then you would have ample of time to get the CBC report prepared, and having regard that you are the surrogate parent entity within the group. So bear in mind that it does not, you have to go through on an annually basis all these exemptions. So make sure that exemptions applied during the previous year does not apply to the current year. All right. The next one will be annual relief for local file. This is where if your taxpayers has no international related party dealing at all, right? So when you prepare your tax return, when you look at whether you're below that 2 million threshold or not, that's where you start calculating your the value of the verified dealings. And as the tax agent, you would know that you may or may not have a international real dealings in Australia. And if you do not have it, then you can apply for this relief for the local file, right? For the local file to the ATO, explaining to them that there's actually no need to prepare a local file anyway, because there's nothing to be declared, right? So more or less, this will be approved, and that you're not required to actually then lodge the local file. Now, another key thing is that you're not required to lodge the local file, but it does not evade you from having to notify the ATO that you're still part of the country by country reporting entity, that you need to notify the ATO that which party within the group, within the jurisdiction, are lodging the country by country report, and as well as looking at lodging the master file as well. Now, this admin relief only applies to local file. Obviously, you can apply different type of exemptions, local file, master file, report. If you can apply for all, then you're not required to lodge any of these reports if exemptions are being provided. Then thirdly, there are tax exempt entities under Division 50 ITA. Then you have also the National Tax Equivalent Regime entity that with the respective definition for those entities. This will be under the website itself, so you can look at all the entities that falls under these categories. Then next, we have dormant. So you have any dormant companies within Australia, and the dormant company obviously would most likely not be the ultimate parent entity. Then you're still required to notify. Even when you're a tax agent, you still have to require to notify the ATO that no income tax return is required anyway. So therein lies the other country reporting statements as well. Okay, so next I'm going to go through the fast track exemptions. So these are the scenarios where you can apply for fast track exemptions. Now, fast track meaning that when you have these type of scenarios, most likely it will be approved. Highly likely that it will be approved if you satisfy all these criteria. Now, first scenario would be if you're a country by country reporting with no foreign operations, meaning, and including PE as well, meaning that you're more or less domestic real transactions, that you can opt to then exempt the preparation of CPC report and master file up to 3 years. So please bear in mind the exemption type, right? So these are only the statements that you're not required to lodge. So let's say, for example, number one, local file will still need to be lodged, right? Unless you apply something for the local file. Secondly, if you are scenario one and you have no real transaction, then all three are exempted after 3 years. So the duration after 3 years, that's fine. So make sure you keep track on this. It only applies for 3 years. Then again, after that 3 years, you need to reapply again. And the thirdly would be if your annual global income of your parent is above 1 billion, but then for Australia's purposes, it may fall below, for OECD purposes, it may fall below that foreign CBC currency threshold. It depends on the jurisdiction. The OECD would be euro 750 million. So for these purposes, it's for number three, it may be more apparent now because of the fluctuating foreign exchange currency globally. So please keep that in mind and have a open communication with your foreign parent, and to ensure that are they obligated to actually prepare and lodge country by country reporting or not. And for number three will be CBC report and 1 year. And then number four, if you have serial number three, but then Australia is the only jurisdiction that has the obligation to lodge a master file, then you can apply for the exemption for master file for 1 year. And number 5 would be if you are an SGE and will not be an SGE under new structure. Yeah, then obviously then for number 5, you have to make sure that you assess your country reporting obligation thoroughly to ensure that, you know, if you're being acquired or you have merged or you have went to another group, that the other group is actually not a SGE, then you can apply for the exemption for CBC report and master file. Number 6 would be, well, if you are a foreign resident with an Australian PE, then you can apply for a CBC report up to 3 years. And lastly, if you have no real buy transaction and your foreign resident operating through an Australian PE has no cross-border internal dealings, so that's the PE part, then you can apply for a local file for 1 year. So these are, for now, the fast track exemptions that you have with the ATO, so that you can actually have a quick approval for these scenarios. Next, we have other exemptions where if the Australian presence has ceased or not. So here, a lot of the times where it is under the assumption that if the Australian presence or Australian entity has ceased operations, it may not be considered reasonable grounds for exemptions. You really need to then put up a case to the ATO to explain further or to justify that any of those activities for the previous income year are not material. So it really depends on the previous income year. So bear in mind that the CBC obligation is actually 12 months after, and it's looking at the previous income year's transaction. So that's what ATO will be looking at. And then the next one would be rather, it's a stumble block for a lot of tax agents and ourselves, where sometimes due to the smaller operations of the Australian jurisdiction, where the group is reluctant to provide additional information to the Australian entity for the purposes of CBC reporting, which we understand the case where there may be confidential information there, and then really the tax agent will need to inform the client of the possible impact of not having this provided to the ATO, especially the penalties, which Shannon will most likely go through later. And that if they do not provide those information, they will risk having additional penalties depending on the period of not providing and lodging your country by country reporting statements. So it's more or less not a case where the ATO would not accept having the difficulties in providing information. They'll provide you additional extensions for now to obtain that information, but that is not an avenue to, for exemptions purposes. Now, so I've gone through exemptions where hopefully when you have your taxpayers look at the circumstances for your taxpayers, ensure that you have gone through all the exemption lists and see whether it applies before looking at whether you need to prepare the local file or not. So yeah, but if you look at the fast track ones, more or less, it can be an avenue where you still need to prepare the local file. A lot of times you may not need to prepare or lodge the CBC report, the master file, but local file, the only time that you're not required to prepare a local file is if you have zero international related party dealing. And I've got experience where even if the Australian taxpayer have, let's say, 100,000 worth of sales and marketing services, for example, and I tried to reason with the ATO, and they're saying that you have these services and marketing services where it may be more of a value add services, hence it's not reasonable. It's not a reasonable ground for us to provide that exemption. So these are the avenues where, yeah, we would have the experience that almost always, if you have related party dealings, you will need to prepare the local file. All right, next part would be the lodgement. The lodgement format would be the OECD format, where it's the XML schema by the OECD. And these, you need to then convert the statements into XML. Once you have the XML, then this XML will need to then be lodged to various portals, yes, tax portals, or you have to be lodged by certain software. So you can't just lodge the actual statement itself. It needs to be under that XML file. And I will leave the last part to Shannon to talk about the
bad part, the penalties part of it.
Yep.
Yeah, penalties. So they wanted to get everyone's attention. I think they did a great job with getting everyone's attention. So the penalties, failure to lodge. Now, failure to lodge a tax return, you know, $1,000, $1,250. We're not talking big numbers, because we're dealing with multinational companies, and we know how the government is. Anytime there were those big bad multinational companies, you always hear it when the tax office talks about their focus areas. So the actual penalties can be up to $525,000 for failure to lodge a country-by-country reporting statement. So it's definitely, to cover yourselves, definitely worth your while to make sure that you highlight this to the client, that you have it in writing. I know when the company is maybe a small entity, or even the situation where HC was talking about, where globally they haven't qualified, but to have to do it, and they have to do it in Australia because they've gone under they've gone over that threshold here in Australia. You know, then you are actually going to need to lodge those. So I would definitely, I haven't seen yet anyone be charged that. We have, in the first year, we had a lot of people phone us with this letter and panicked, and can you help us, and what can we do? And we were able to get that waived at that point in time. Now, we were told the ATO was only going to do that for the first year, and so I haven't seen anyone yet having to pay it, but I've also seen people get the warning letter, and we've received many of those phone calls with the warning letter saying, if you do not lodge, you will be charged $525, and then obviously we've put the things together to do that. So it is a real penalty. I would suggest that they're more likely than not. I guess what people are probably saying is that the ATO is not waiving penalties on failure to lodge on other things at the moment in the way that they used to, because clearly they're broke and they need more money. So I would say a few of these 525,000s could go down quite well for them. Interesting, I've been dealing with a number of companies in the US at the moment, and the IRS, actually, the late lodgement of tax returns, depending on your size, etc., goes up to about, it can be about 30,000 starting point, up to 50,000, and there is no waiving of late lodgement over there. They don't waive that fee. You pay it. You're late, you have to pay it. Hence the reason everyone tries to do it on time. So so then actually, I guess, how can we help from Transfer Pricing Solutions? So we can obviously analyse your significant global entity if you want us to have a look, if you're not sure whether you're actually going to fall under that. And we do get that quite a number of times to go through and see whether you would actually have to be subject to these rules, and give you some advice on that. We can prepare the country-by-country reporting statements. We can lodge it through the software, so we license some of the softwares to be able to do that. We can apply for extensions to lodge. We do have the direct, I guess you could nearly say, bat line. I think HC has a personal, you know, a direct line to the head of the country-by-country reporting. I think they know you on a personal basis, don't they, HC, to be able to go and get with the times that we're getting extensions or exemptions and things like that as well. So we can help you with any of that as well. So it's coming up now, coming up soon. Well, we've just had our 2 webinars. We do have the recordings for those webinars. So if you did miss them, we've got the key transfer pricing tips and tricks, or also the international dealing schedule. But we'll open it up to questions. Now, I've got 2 questions that have come through. One, I think it did come through before you started talking about it. So I think you may have already addressed it. But the question, HC, was if the global entity has a turnover of under 700 million euros, but over Australian 1 billion due to the AUD exchange rate, does the country by country reporting apply?
Yeah, the obligation will not apply in the global entity's jurisdiction, but then it will still apply under Australia. Yeah, as I've gone through the exemptions earlier, what you can do is we can apply for exemptions to, you know, forego certain lodgement, as for example, the CBC report or the master file as well. So, but then you still need to lodge the local file.
Yep. Then we had another question just on the software that you can use for the country by country lodgement on behalf of a client. You would probably never actually want to use it if you only have one client because of the cost involved. So I think it's about 5,000 a hit. There's a few out there that do it. So there's a few different software, your different tax software companies do it. Reach out to them, even the tax software company that you're using. If you're using Xero, they don't do it. But if you reach out to any of those, your CCH and a few of those, we use the one that we use with our database, but we have access to that because we license the full transfer pricing database. I'm not sure that it's actually readily available from that perspective, but reach out. But I know it's probably over 5,000 a piece to license the software on a standalone one user, one entity basis. We allocate it because we get such a high volume. We're able to only charge $16.50 on the software side of things per lodgement. We're able to do that a lot more cost effectively because of the volume. And just so that you know, don't screw up your lodgements when you do it. If you go to do it yourself, don't screw them up, because we actually had an accounting firm approach us who did license it, do it all themselves. The ATOs contacted them and told them that they've actually done it incorrectly, and they went back to, they were using the CCH software platform. So they wanted to do an amendment. The amendments are not like your amendments in your tax return. You can't just go in and click amend and tweak it. You actually have to do it again. And I guess they reached out to us because CCH said, well, you've already done those lodgements. You're going to have to pay for the software all over again for every single entity that you wanted to do it, because it's a whole new lodgement. And that is correct. It is a whole new lodgement. There is no such thing as an amendment when it comes to lodging the country by country reporting. So yeah, I was surprised actually. The ATO contacted them and said, you know, you've made errors in all of your country by country reporting lodgements. So I was surprised that they got that feedback. But they were going to have to redo all of them because they had been lodged incorrectly. I don't know what they did incorrectly, but yeah, it is a per lodgement basis that they charge it on. So yeah, you could look at, I think it's CCH and a few of the other tax softwares that do it, but just see what their individual lodgement thing is. I know we work with a lot of accounting firms on it, and yeah, the accounting firms tell us that our fees pretty much work out that, you know, the time is better for us to be doing it, and because our database, we're able to do it a lot more cost effectively because of the volume. Some of the big accounting firms created their own lodgement software to do theirs as well. So any other questions? I think that's the only two questions that we've had coming through. Okay, so yeah, if you are getting sick of Netflix, we have a heap more videos available for you. We do record all of our sessions. You want to learn about transfer pricing methods, you want to learn about TP documentation requirements. If there's something that you actually think would be interesting, do let us know, and we can always do that as a webinar. We do have certain webinars specialising in services, intangibles, etc. Our contact details, so our Australian office, we also have our Singapore office and our Malaysian. Feel free to reach out or connect with us on socials. But thanks very much for joining. I hope by the end of this you love transfer pricing as much as we do, and country by country reporting as much as HC does, because it's not my 100% favorite. But I hope you enjoyed a bit more, but also trying to manage your risk as tax agents and making sure that, you know, you cover yourselves, because clearly clients tend to forget things that you tell them unless you have it in writing and you reminded them 10 times to look at transfer pricing. But feel free to reach out if you have any other questions. Thanks very much, and have a great long weekend, everyone.
Thank you.
Thanks.